This is Capital Ideas TV. Coming up, the CEO of CannTrust, a low-cost, high-margin, under-the-radar cannabis producer. Parklawn's CEO on new acquisitions and a healthy cash pile. The VP of Sales and Marketing for NuRAN Wireless on connecting the developing world. And rock star and entrepreneur Gene Simmons with his secrets to success. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. Though the cannabis industry in Canada may still be in its infancy, a number of top operators are already making names for themselves, such as Canopy Growth, Ebitda, and Cronos. Yet there are a handful of extremely well-run competitors that are flying under the radar. CannTrust is one of those. It may be the best-run cannabis company investors have not heard about. Here are 3 charts that make that case. CannTrust management is relentless in its pursuit of lowering costs. The company has developed proprietary methods of streamlining processes and boosting worker efficiency. CannTrust enjoys the 3rd lowest adjusted production cost per gram in Canada at just $2.12. That efficiency translates into larger yields. CannTrust facility in Vaughan churns out 375 grams per square foot, above the industry average of about 200 grams. Its hybrid greenhouse in Niagara is expected to best the market as well. That combination of low costs and high yields equals fatter margins for CannTrust. The company owns the 3rd highest trailing 12-month gross margin at 76%. A focus on cannabis oils has helped juice those margins. They made up about 2/3 of CannTrust sales in the 3rd quarter. CannTrust sells its products at an average of $9 per gram, which is also a premium to the market. It's just another factor that puts the company in an exclusive group among top-tier cannabis operators. CannTrust is just one of 4 marijuana producers that generated positive adjusted Ebitda on a trailing 12-month basis. Its $3 million sits behind MedRelief at $8 million and Ebitda at $7 million. Most cannabis producers are still spilling plenty of red ink at this stage of their development. CannTrust may have one of the smaller production profiles in the industry, but that hasn't held it back from building a sizable market position. The company currently holds about 10% of the medical marijuana market in Canada, and analysts expect a similar share of the recreational market. They have a joint venture in Europe and about $20 million in cash to keep things going. Here is President and Chief Operating Officer Brad Rogers on the rest of 2018. And remember, this is the guy who used to work for Metrum Health when they were taken over for more than $400 million by Canopy Growth. Brad, update us on your facility in Niagara for CannTrust, when you're going to finish it and what kind of production are we looking at?
So phase 1 is well underway. We have all the ranges populated now and it's producing better than expected results, and we're very, very happy about what's going on down in Niagara for phase 1. And so if phase 1 is any indication of what's going to happen in phase 2, we're in for a very, very, very profitable endeavor down there. It's growing, like I say. We expected 175 grams per square foot. We are producing over 225 right now in phase 1, and that is unoptimized. And so we're expecting greater results out of there. And so we went to market saying 40,000 kilograms per year projected full run out of that facility. I dare say we're going to be exceeding that. So we're excited about that.
You're known as one of the lower cost producers out there. You've got higher yields in a relative sense, higher margins. How do you pull that off? How do you manage it?
Our philosophy is 3. It's people, process, and technology. So on the people front, we don't employ master growers per se. We have PhDs growing our strains and growing our products and guiding the horticultural practices that we do in the grow. And so growing by science is very different than growing by feel. And so it gets you to scale, gets you repeatability, and gets you standardization. And that's exactly what we've done. And it gets you higher yields ultimately as well. And so to dial in the strains and make sure that all the horticultural protocol is on point. That's one of the secret sauces, and you should come to Niagara and see the rest of them. I think it's a very exciting place to be.
Sounds good. We'd love to come. I'm in Niagara on the Lake quite frequently, so I'll make a little side trip. Why not? So you also say at CannTrust you're picking up about 25% of new medical marijuana patients. How do you do that, and is it sustainable?
I think it's very sustainable because of the fact that we've been very disciplined within the medical channel. All of our products have standard label claim, and that's a big value proposition for CannTrust. So understanding that you get the same product every single time, that shouldn't be a guesswork for any pharma product. And so we've taken the pharmaceutical approach. We've got standard label claim, pharmaceutical standard label claim on every single product. So it makes it very easy to detail doctors, and that's another secret sauce of ours. We have doctors detailing doctors. We hire medical doctors, and they go in and talk science with the doctor, and that's a very different conversation than a regular pharma detailer going in and talking what the drug does. This is actual doctors talking to doctors, and so it resonates that much more, and we get a lot of the mind share from that.
Now, you have among the strongest EBITDA in the business. You had record revenue in your most recent quarter. A lot of that coming from cannabis oil. So explain that strategy, and is that a direction you want to continue to push in? Maybe not so much as opposed to, but in complementary with bud.
Yeah, so the bud, that was the only option for us at first, and bud was where it started. But when you detail a doctor, I don't think you can articulate how to dose and titrate bud. I mean, it's a smokable product, and so you don't know what's happening within it. And so it's very difficult for a doctor to get their head around something that they don't understand. When oils came into play, that's very dosable, very titratable, especially when on a pharmaceutical grade label claimed product. And so when we serve our 1,000 milligrams per bottle in activated content across THC, CBD, and 1-to-1, and that's the same thing every single time, doctors can dose, titrate, and gauge efficacy. And so they're very, very comfortable with the oils. And we just got approval for our capsules as well now. So we have 10 milligrams capsules in THC, CBD, and 1-to-1, pharmaceutically standardized as well. And so that's another piece for the doctors to be able to prescribe from the CannTrust portfolio.
Another piece for you is the fact that you have an export license now. You've already exported some medical cannabis to Australia, correct, which is thought to be a bit of a hub in the making, and you've got some other countries lined up. So what does CannTrust look like eventually in terms of international sales versus domestic?
Well, CannTrust is perfectly positioned to enter international markets because when framework is built around cannabis, it's typically built in the medical form first. And so because we've taken the medical position, we enter those markets seamlessly. And our brand stands on its own when we go in there. And so we have third-party companies coming to us and wanting to work with us because of our positioning, because of our IP, because of our standardization, and because of our expertise. And so for example, we took a 25% carried interest, no cash down, for our StenoCare deal. StenoCare is a licensed producer in Denmark. We see that as a beachhead for all of Europe. And so they've got 75% of all pharmacies in Denmark. And so we're very, very excited to jump into that market and understand how that cannabis play works in Europe, and then we can roll that out across Europe.
Let me ask you lastly, Brad, about valuation. When you talk to the average person about the cannabis sector, you hear about Aurora and Canopy and Afria. Usually those are the big three. CannTrust seems to fly under the radar, and GMP has said that you're probably 55% undervalued to some of your peers. Why do you think that is? Oh,
I think we're at least 55. Yeah. I think that's what he said.
Okay.
So, look, we concentrate on doing a good job. Fundamentals are key. I think there's a lot of fluff in the industry. If you look at CannTrust and what we've done and what we've accomplished to date, we're the most fundamentally sound companies out there. And so, for a GMP to speak of us in that light, and when you look at all the other analyst reports, we're significantly undervalued relative to market. And I think that's going to come to fruition when people start looking at fundamentals, at results. We look at the bottom line. We understand what our shareholders and shareholders' values are. And long term, that's going to be results, and we're providing results for the market.
We feel like we're the wave of the future in terms of how people test for things. We anticipate being the first sample-to-answer instrument that can process up to 22 pathogens at a time. Whatever you want to test for, you can do it on your own. You don't have to ship it away to a lab. You don't have to have an expensive microbiologist. It's something you can do on site. You collect that sample, you input it into the machine, you hit a button, an hour later you get the result you're looking for.
It's been said there are two certainties in life, death and taxes. Some may find that a bit depressing, but there is a silver lining. Investing in the former can help pay for the latter. Putting money into funeral homes, cemeteries, and crematoriums has been one of the more successful investment strategies over the past decade, and there's reason to believe that will continue. Here is a projection of senior citizens as a percentage of the U.S. population going out to 2060. Simply put, the volume of gray hair in the country is set to explode in the coming years. Seniors will make up more than 20% of the American population by 2030 and will top 25% by 2050. Similar trends are taking shape all over the world, creating incredible demand for end-of-life services like never before. American death care companies have been reaping the rewards of this demographic shift for some time. The two largest publicly traded ones, Carriage Services and Services Corp, have both soared nearly 300% in the past decade. That humbles even one of the longest bull runs in the S&P 500's history, which has seen the benchmark index double in value. Park Lawn Corporation has notched similar gains in Canada. It's the only publicly traded death care company in the country, and its shares have handily bested the TSX Composite Index. Park Lawn has roughly tripled its value in 5 years. That creams the TSX's gain of just 20% over the same time frame. Park Lawn has been one of the best performers on the benchmark since it graduated to the index in October of 2016. Park Lawn's impressive growth has been fueled by strong operational performance and some shrewd acquisitions. The company recently made its largest one to date, snapping up CMS for $50 million. The deal brings 7 cemeteries in the New York, New Jersey area into the fold, with an organic growth rate twice as high as Park Lawn's other properties. But Park Lawn isn't done just yet. It's stocked up full of cash, and a recently beefed up credit line helps as well. The company is looking for more opportunities. CEO Andrew Clark explains what's in store for 2018. Andrew, let's focus on Q4 earnings. Your margins improved, but revenue was a bit lighter than what analysts were looking for. So was that primarily due to MMG in Michigan?
It's primarily due to MMG in Michigan. We had softer pre-need sales in that market. It's also due to a tougher comparative period in our Toronto market. In Q4 of 2016, we opened a new mausoleum in the Toronto market, which resulted in 17% year-over-year growth from 16 to 15. So we had a tougher basis of comparison in 17, but also softness in the Midwest memorial business.
And for those that don't know, pre-need, it means what?
It means purchasing a service or a property in advance of the time of the death taking place.
All right, so overall in 2017, adjusted earnings up about 75%, very robust, revenue up around 30% year over year.
Yeah.
You were saying off air that you've basically blown through your Ebitda target for 2019. So you've got to get together with the board and your team and figure out what the targets are. So tell us about that, and also how much is going to come from acquisitions, how much from organic. What's that breakdown?
We've generally guided folks to be in the about 70% of that growth. 60 to 70% will come from acquisition. 30 to 40 will come from organic initiatives. We are sitting and thinking about what our next long-term plan would be. Historically, we've been tripling over each of the past 3-year increments. I'm not sure a tripling is reasonable from such a higher baseline, but we're going to go through that with our board, and we're come up with a robust target.
Speaking of acquisitions, you just made your biggest one ever, $50 million CMS in the New Jersey, New York area. So what was it about these assets, these properties that it appealed to you?
So these assets felt to us very similar to the original 6 assets that we got involved with at Park Lawn in Toronto. Very densely populated urban markets, lots of ethnic and religious diversification, and so really attractive to us from high barriers to entry, good margin profile in the business, and not too many of these type of assets come up for sale in that type of market.
So when you look at these assets in New Jersey, New York, what can Park Lawn bring to the table to improve the organic growth and and just get the numbers up?
Yeah, so there's some good opportunities. We have the opportunity to acquire or close on the acquisition of a market in Lafayette, New Jersey, which is about 25 miles outside of New York City. So build out some inventory opportunities there, cemetery inventory opportunities. There's also a market in Princeton, New Jersey, where we have an asset now through CMS that is largely untapped, and so we have an opportunity to build some significant runway there.
Now, Andrew, you've told us before that the cemetery and funeral home market is quite fragmented, especially in the U.S. A lot of independent owners who are retiring, they want to get out of the business, maybe the kids don't want to take over. So you've got a credit line, you've got something like $125 million available to you. Yeah. So can we read the writing on the wall and assume we're going to see more deals out of Parklawn this year?
There's more opportunity for us for sure, Mark, and the opportunities will take different forms. We've done both bolt-ons and platform-level acquisitions, and we have both of those types of opportunities in our pipeline right now. So absolutely, we would expect further M&A activity this year.
Lastly, the stock, historically, Parklawn's done very well. Right. So where does this stack up now in terms of valuation? What do you think of the stock currently?
Well, look, we would always believe that there's room to run.
Let's have a look here, by the way. Why? Very nice.
Yeah, that's a nice chart.
Yeah, that's just a 1 year.
Yeah, no. Yeah. So we think there's good opportunity. Given our access to capital has been attractive. Our cost of capital is relatively low, given some of the opportunities that we're seeing. So we think that there's further accretive opportunities out there for us. Absolutely.
So we finance top-tier companies in the medical cannabis industry in exchange for a royalty. I love the royalty model. I think it works perfectly for this industry at this time. Debt is largely not available in the U.S., and equity can be massively dilutive. And the reality is every company in California and most states right now is a startup company. So we offer a very attractive, either a complement or an attractive alternative to debt or equity, which really aligns our financial interests with the interests of the people that we invest in. So when they're successful, we're successful, and the more successful they are, the more successful we are.
It might seem as though Wi-Fi hotspots are available no matter where you go, but that's not the case for many developing countries. Roughly 70% of the global population has no access to a reliable wireless internet connection. That's where NuRAN Wireless sees a world of potential. Here's a regional breakdown of mobile subscription rates around the world via Ericsson. Many areas of the developing world, such as Asia Pacific, India, and China, have the highest subscription rates thanks to their large populations. Africa, for example, has nearly 1 billion subscribers, triple that of North America, despite its higher penetration rate. That means the developing world has a massive potential to hook up to the internet, if only someone would provide a connection. NuRAN Wireless thinks it has the answer. The company designs extremely low-cost, low-energy wireless modems and connection hubs that can be installed in rural areas. They hook up to satellite internet providers and regional networks and disperse the signal to nearby communities. NuRAN's Vice President of Sales and Marketing, Francis Letourneau, explains how transformative connecting these rural areas is for the economy and his company. Francis, NuRAN Wireless has this relationship with Facebook that's gone on for a while. So define and characterize what it is exactly and how it's evolved over time.
We've started that relationship like 2 years ago. There was this big launch of Telecom Infra Project, which we were a founding member of it. And the relationship is not only on the exchanging ideas of how we connect this next billion or something like this. It went up to the expertise that we have. So we've been doing engineering in the wireless space for like 30 years before, and we've developed these products as well. So Facebook came to us and said, can you help us developing the next generation product, which are not competing against ours, but complement kind of the product portfolio. So we've done a lot of work with them to bring these products to life as part of the Open Cellular Work Group, OC product that they call. There's 3 products out there on the 2G space and the 4G space as well. But on top of that, Facebook's motto or Facebook's focus is to connect new users across the globe. And they know that the rural space is a good growth pattern for them. So they are discussing with most of the large operators like the Vodafone, MTN, Airtel, Telefonica, Telenor, and NuRAN is the team behind making it happen. So this is how the relationship has evolved over time with Facebook. So we are in the middle of everything that's going on for connecting the next billion, and we follow that dream jointly.
You alluded to a few of your products. You've got a wide range of products. Can you give us an update on what you're doing with some of these and some of the advancements you're making?
Yeah. So this Facebook relationship, of course, has put a lot of fuel in the tank to develop these new product line, but we're aiming towards 3G and 4G as well. Same for the rural market, but going back to the urban market. So that's something that should be upcoming in the next couple of months or years.
Now, tell us and give us a sense of the size of this rural market in emerging markets and some of the advancements that you've seen in maybe just the last couple of years.
I'll go back by users. So GSMA and a lot of surveys pretend that there's 4 billion people without any broadband connectivity. And out of this 4 billion people, there's 1 billion people that don't have any mobile coverage. So the market sizing, if you look at it from a pure statistical point of view, you need to connect all these people. So it's a couple of million market size for the rural space, especially on the mobile side.
Now, you admit yourself that NuRAN's just a little bit behind where you would have wanted to be, but I get the sense that 2018 is a real inflection point year for you. Why is that?
Yeah, exactly. So we're, I would say, 12 to 18 months behind schedule on what we wanted to achieve. So 2018 should be the turning point where we get back to profitability and then continue to grow over time.
And what drives that?
We've run through all that process of being certified by all these operators, and investment is coming, not only for us, but for our customer to do the rollouts and everything. So this is how we think that 2018 will be the turning point and where we will start seeing this hockey growth.
Now, you're not the CEO, and maybe you're not the right person for me to ask this, but what's the potential here as investors listen to you about NuRAN Wireless? What's the potential down the road for this company?
Yeah, so what we have on the table right now is multi-million-dollar contract that will last like for 4, 5, 6 years with different operator or with a satellite operator or tower companies. So we can potentially aim at hopefully, my guess would be, or my hope would be to double what we've done in 2017. I don't think we'll get there, but we'll be fairly close. But for the 2019, this is where you should see all this ramp up coming in.
And you have a hockey stick in your mind, right?
Of course. I've been playing hockey for 35 years, so I'm still in that mindset. So it's the playoff now for us, and I think we're getting there.
Right now you walk inside a truck and you see multiple devices. You see a fleet management device, you get two-way radio, black box, tablet of some sort, front camera, $6,000 to $10,000 worth of equipment. We're shrinking down to less than $1,000 in one device. The change in the cabin is just dramatic. It's just much, much safer for the truck driver to be able to use one device. Really what we're doing is we're creating a new environment and a new technology that has not been seen to date in the market.
There are few rock and roll legends more iconic than Kiss. For decades now, the band has captivated audiences around the world with its colorful costumes and smash hits. But what you might not know is how financially savvy the band has been. Kiss has actually made more money from licensing deals than it has from album sales. And that says a lot because they've sold 100 million copies worldwide. Now, the architect behind much of that financial success is frontman Gene Simmons. He's one of the richest musicians on the planet at an estimated $300 million. He has investments in all sorts of businesses, from a restaurant chain to a clothing line to financial services. And now Simmons is sinking his teeth into cannabis. Simmons has struck a deal with Invictus MD to become the company's chief evangelist officer. The rock star will provide marketing counsel to Invictus, assist with public awareness, and serve as a company spokesperson. He'll also help with branding efforts once cannabis is legalized recreationally in Canada. In addition, Simmons has agreed to attend at least 50 investor presentations and 25 company events over his 5-year term. Simmons is highly sought after in business circles thanks to his marketing prowess. It's a talent he cultivated over many years. and it was fostered from very humble beginnings in Israel. The rock and roll superstar joined us to discuss his business acumen and what helped shape his entrepreneurial spirit. Gene, let's keep it rolling here into your entrepreneurial side. We've sort of touched on it a little bit, but I love the story of you being 7 with a friend and deciding we're going to sell fruit by the side of the road. And that was really impactful and shaped you as a business person. Why was that?
I always used to go up to Mount Carmel, the biblical one, and there's cactus all over it and cactus fruit. So myself and Shlomo, my next door neighbor, decided that we should go up there with a small pan and collect all the cactus. Now, of course, we got pricks all over ourselves and all that, but such is labor. There's no growing without pain. And we took the cactus fruit down to the thing, and the very nice grocery store guy, there's a small hole in the wall grocery store, who gave us a little ice water with pieces of ice in it. He goes, here kids, you know, get away, don't bother me. So we stuck the ice water there, and so the cactus fruit was thirst quenching and delicious. And we had a little sharp edge of a can that was open. That was our knife. And we were charging 1 pruta, which became the shekel and all that, a penny for a thing. And so by the end of the day, you know, we were covered with sores and bleeding a little bit, but we had the equivalent of something like $1.80, you know, of money. And in those days, you know, you could buy a Rockefeller Center for $1.80. And so we took the money, and it was all in coins, and it was, you know, like more money than we'd ever seen. And I wanted to show my mother, so I gave some to Shlomo, my idea, so most of it came to me. And so I figured that one out in the middle, in the beginning. And as we're going down the road, there's an ice cream cone. I'd never had ice cream, ever. I was 6 and a half, almost 7. So I gave the man some stuff, and that was the sweetest, most amazing thing I'd ever had. And I still remember that taste now, because by the sweat of thine own brow, as the good book says, nothing tastes so sweet as something you worked hard to get. But it goes even more. I took the, you know, and gobbled it up like crazy and held the money and went back to my, you know, to where we lived, just nowhere, and I put the jingle jangle of the coins on the table, and my mother, you know, teared up, and she said, "That's my little man." And then I understood.
Your best investment ever was what?
My best investment continues to pay off, and it's me. I bet on me. My track record is very good. I trust my gut because I do my homework. It's difficult for me to trust other people as much as I trust my own self, because to thine own self be true, the Greeks say. My best creation is Gene Simmons. I created myself. I wasn't born Gene Simmons. I didn't speak your language. But I'm fast learning Newfie. My wife is from Newfoundland. Stay where you're doing, I'll come where you're at, bye. And my kids are also Canadian citizens. There are people I admire, but I've never met anyone like yours truly. Sounds like self-aggrandizement. So let it be.
Well, you are one of a kind. There's only one Gene Simmons.
And good looking, too.
I'll tell you. Shanna thinks so.
That's one.
Okay. From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great investment research and great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.